Mrinal Singh, CEO and Chief Investment Officer at InCred AMC. Mrinal, great to have you with us here. Thank you very much for your time. Appreciate it. I was just looking at the Emerging Business Fund, the Category 3 AIF. We have the sort of numbers and the fact sheet from you. It says that you are sitting on some 26% cash. Is that a... So I just want to start with that. If one goes by that, that kind of tells you that you are very cautious overall as far as markets go.
So, that cash has to be looked in the context of, trying to keep some gunpowder for potential opportunities and a proxy for large cap as well. So, although it might look like a large number, generally compared to what typically fully invested funds run, but AIFs don't have a strict mandate to be fully invested all the time. You can choose to take tactical calls. The India growth story obviously is very robust and long dated. So we don't see a doubt in that. We obviously do feel that as and when opportunities do emerge and the volatility that is expected in the market, we would like to have some gunpowder ready so that we can, make the most of it. And we have as a proxy for cash or proxy for large cap, we have kept some cash in that context as well.
Could you tell us, Mrinal, how old is this fund and have you created this cash recently or, have you been running this since, you've been keeping this cash for a while?
So this is a 2-year-old product now, and we actually booked some profit recently. So the cash levels have gone up a little, and we are waiting for better prices maybe. And we are currently working on some names that if potentially we do succeed in finding right prices, we would deploy those cash there.
Do you want to tell us where you booked profits recently, Mrinal, and what would be the, the themes that you're looking at?
So we did book profits in industrial names, some bit of industrials. We were thoughtfully very underweight in financials, so we moved some money towards financials of late in the correction. We've also booked some profits in some select healthcare names, more to do with business, and so on.
Okay. Mrinal, what is the outlook that you have towards technology right now? Whether it's large cap, mid cap, because we're seeing some interesting sort of notes over here. And the whole question mark about whether the market is priced in too much of euphoria and optimism with respect to a turnaround. Do you have any positions in tech?
Yes, so we do have positions in tech, and I think very interesting space. Clearly, a lot of thumping that we saw in tech in the last 12 months pertain to the deteriorating outlook of US, tech consumers in particular. But then I think if we are willing to look across the horizon, technology looks very interesting. The seeds for next technology investments are already sown between AI, drones, IoT, and the likes. We are going to see a very long runway of investment in that direction. So I guess companies which are investing and creating capabilities in that direction would definitely merit investment. So technology as a space, although we have investments, we would look to add, our weights over there going ahead.
Okay, all right. Hi, Mrinal. Nigel on this side. Could you help us out with what are you looking at in technology? I can see Zensa Technologies, that's one stock that's making it to the top holdings list. If you could name a few stocks that you all are still positive on from these levels?
So, the name you took was something that we bought last year. The pecking order that you see is courtesy that stock having done well. It's in a time zone where most tech names have actually delivered negative returns. So a very alpha kind of allocation that we did. Clearly, we prefer companies which are working in the space of product engineering because a lot of new products aligned with AI in particular and ML are actually being worked upon. So there are some names in that direction. Plus, we do like the agnostic service providers, the typical large caps like a Wipro or Infosys or an HCL Tech. It's a matter of valuation where we step in. A couple of names do merit, they already reflect in our portfolio, but then a few more for an interesting price could actually make an entry.
Mrinal, auto is your largest relative overweight. I think you have about a 23% holding in autos in your emerging business fund. You've got names like a Hero MotoCorp, Amara Raja, you've got Maruti Suzuki, Tata Motors, which has now emerged as India's most valuable automobile company, doesn't find mention at least in the top 10 holdings. And there is a recent corporate development about splitting the two businesses into CVs and PVs. Why is it that TAMO wasn't, a part of your, at least the large holdings? And any thoughts on this particular development?
So, well, auto, if you notice carefully, between auto and auto ancillary is where the weight is. So it's a combination of those two distinct spaces. Auto ancillary is a sector that I would separate from OEM auto. And we are largely invested into names which have footprint into rural side of things. So be it the two-wheelers, be it the mass four-wheelers, and the supply chain, they are largely fed into the rural consumption patterns. We are quite gung-ho about rural consumption going ahead, and it is our way of stepping into that direction, because in the pecking order of consumption behavior, mobility is somewhere high up as rural spending will pick up. So that's how it is. It might look like auto, but it's our way of stepping into rural consumption. Particularly, TAMO in particular is a combination of CV and a lot of UK-based business. So we've kind of stayed away from it, not for any particular reason, but largely because our preferences were in this space, and we already were running a very large weight between auto and auto ancillaries.
Mrinal, you said that you were evaluating a few more ideas. Now, without you can name names, that'll be great, just for educational purposes. Or if you want to just talk to us about where broadly, where are the new opportunities, or will you plow money back into what you already own?
No, we would look for newer opportunities. We generally resist talking about names that we are under evaluation. So that I would avoid, but what you see, what is in the public discourse is something that we can talk about.
Any areas, or are these very idiosyncratic opportunities, or are these themes that we can talk about?
So it's a combination. We would clearly prefer product engineering space. There is preference for agnostic IT services providers as well, but that's on the large cap side. But then very, very idea specific names, per se.
I see. I got it. By the way, can the fund invest in some of these IPO, pre-IPO issuances as well? The pre-IPO rounds? Have you done it?
So the mandate does allow, but we haven't done that up till now. We have looked at any offering, be it an IPO or be it an existing stock, as an individual agnostic, idea to invest in.
Gold loan business has seen some very aggressive growth. While you've had the traditional players like Manappuram, Muthoot Finance, banks too have entered this play, and there are many banks with a pretty large holding of gold loans. We've seen the RBI clamp down, at least on one of the players. Have you had a play on any of the NBFCs or banks purely on account of their gold loan focus?
So our preference has clearly been home mortgage. If you notice in the portfolio, there is one home mortgage name. There are no financials besides that. So our pecking order is home mortgage, secured lenders. No pure play gold, but that's not to do with that we don't like the space. We've just had mortgage secured lenders followed by banks. That is how our pecking order has largely been in terms of preference.
Okay, all right, Mrinal, we will wrap it up on that note for today. Thank you very much for joining in. Good to get that perspective from you.